Hi guys, it's Any, aka the Not Trader, and I'm back again with episode 2 of Pip Talk Podcast. Today I've got another special guest. I've got someone with a lot of institutional experience. He's got over 10 years experience in various investment banks and hedge funds, and he's the founder of a WhatsApp group and community that I'm actually a part of called the Stock Pickers Association. Today I've got with me Debodun. How you doing?
I'm good, thanks. Thanks for inviting me on.
Yeah, thanks for joining me. We've been trying to make this happen for some time, but we get so engrossed on now the WhatsApp chat sometimes that we forget that I went to
Yeah.
actually get you on and speak to you one on one. But yeah, just if you could just tell us a little bit about yourself for those that don't know who you are and what you do.
Okay. My name is Debodun, and I started my career in 2009 as an equity derivatives trader at Goldman Sachs.
Yeah.
And since then, I've traded a range of products. I've traded short-term interest rate futures. I've traded commodities. I've traded oil. Um, I've also traded a lot of treasury products as well. Um, I then moved to a quantitative hedge fund
Yeah.
where things were a little bit different to focus on execution,
Yeah.
algorithms, and that was a multi-asset house. So
Yeah.
literally, we're trading anything that moves: orange juice futures, milk futures,
Wow.
equities, and there was global coverage. So we're trading
Yeah.
Asian equities, ETFs, USA
Yeah.
equities, European equities, and it was very interesting time out there. So on the side, because I moved from Barclays and Goldman, I had pensions
Yeah.
that I had to convert to private pensions. Otherwise, I would have lost everything I had.
Yeah.
And that was the first time I even really knew about Hargreaves Lansdown, other than
Okay.
it being a stock, which I'd seen but not really looked much into.
Yeah.
Um, so I went about that process, and I was learning myself about that process of transferring a pension from somewhere I used to work to Hargreaves Lansdown.
Mm.
So I realized that I could actually have control on what I invested in.
Yeah.
Um, so this was quite interesting for me because I hadn't really um, invested stocks on my personal account before.
What were you
All my
investing in?
personal trading, all my personal trading in the past had been forex, commodities,
Okay.
rate, but not actually stocks.
Yeah.
Um, so the other thing was this long-term investing because I can't touch a lot of this
Yeah.
till when I'm, retirement age.
Is that because of
Um,
regulations of working within the financial sector? Like there's a lot of red tape when it comes to actually investing when you're working within the financial sector. Is that why?
yeah, I mean, usually it's just more you need if you needing to get approval
Okay.
internally,
Yeah.
and
Yeah.
that process can be a bit of red tape. But
Yeah.
once you got over that hurdle, it's quite okay to
Yeah.
actually to do, especially for long term investing because you
Okay.
just do the transaction after
Yeah.
you got the approval and you just leave it there.
Yeah.
Um, now, where how that led to me starting stock pickers is by reputation and the fact. So I do a lot of mentoring
Mm.
and I've always made sure to connect with as many people as possible.
Yeah.
So I've always been known as the networker.
Yeah. Yeah. Yeah.
On the back of that, years and 10 years worth of that, pretty much almost everyone.
Yeah.
And I think it's important to know what everyone does.
Mm.
That way you can know where to direct people.
Mm.
If someone has an interview in law or a consulting company or a trading floor, you already know a couple of people in that bank that you can just refer them to. And it also saves you having to do that yourself.
So you're a
So I've
corporate
built up this
hitch.
massive, sorry,
I said so. You're a corporate hitch, yeah.
something like that.
Yeah. Yeah.
So because of the mentoring I do, I felt it was very important for me to meet as many people in the industry
Yeah.
so I can take the load off myself as well.
Mm.
In my spare time, sometimes I still do some consulting with places like Rare Recruitment,
Okay.
where I will coach candidates and get them
Mm.
prepared for assessment centers, specifically for front office sales and
Yeah.
trading. And the hit ratio is quite good. A lot of these
Yeah.
candidates have actually secured graduate offers.
Yeah.
So I was doing a lot of that kind of stuff for free in the past, but now Rare actually pay me on a consultant basis to do it properly.
That's sweet.
So part time I get paid to do that. And on the back of that, I set up City Jobs Coaching.
Okay.
And that's more meant to be basically when Rare aren't paying me,
Yeah.
still to have something where, you know, it's there. If people
Yeah.
need it, it's there.
Yeah.
Um,
So you're
every
hand.
once in a while, I do stuff for free as well.
Yeah.
It's not all business
Yeah.
because I do believe that that's part of giving back. But I started to stop because on the back of my reputation, of my network,
Yeah.
I used to get a lot of DMs on investing, and I couldn't keep up.
Yeah.
So I said, you know what? I'm going to start a WhatsApp group, and in this WhatsApp group, I'm going to select specific people that
Yeah.
I've come across over the years
Yeah.
who know this stuff.
Yeah.
That way, we can have group think.
Yeah. Yeah.
So, I mean, there are people in that group who are over 60.
Yeah.
You might not know this because you just see names,
There's a lot of high
and
caliber
there are
people in
people.
that group, to be honest. If I'm not,
There are
yeah,
a lot of high caliber people in
yeah,
that
yeah,
group,
yeah.
and it's good because there's a lot of anonymity in there. People don't know who everyone is.
Yeah.
Um, and what I've done is I've made sure that the expertise is in the room.
Yeah.
So people who've been vice presidents in equity research for 10 years or whatever, they're there. Directors, ex Goldman research guys are there. Like, there are people who have worked in equity research in multiple hedge funds. And some of them are a bit quiet.
Yeah.
A few of them are a bit loud.
Yeah.
There are also traders in the group,
Yeah.
people
Yeah.
who've
Yeah.
never actually invested long
Yeah.
term,
Yeah.
but they still have a lot of value to bring because at point of even executing a long term position, having that short term experience is essential.
Yeah.
So I'm actually at a place where I can combine the two.
Yeah.
My trading experience, my proprietary trading experience, my agency trading experience, and my long-term investing
I
experience.
was actually going to ask
And
you that. It's like, how has the so we're going to steer back to the the stock pickers association, because that's a really interesting group of people, and we're going to talk about that a little bit more. But I really want to ask you how, because you've had a quite interesting career both in trading and investing, and it's quite well rounded. Most people specialize very early, and because of you being able to trade in so many different type of asset classes, how do you think that's helped you in your career, or how do you think that makes you think differently to maybe people that have just maybe focused on commodities all their life, or fixed incomes all their life, or whatever? Do you know what I mean?
yeah, so that's a good question because one of the first things that I felt actually made me stand out to get through the door of where I used to work, especially at grad summer internship and full-time off graduate job level, is that I've always had a view.
Yeah.
As a trader coming from uni, it's essential that you always have a view. If something happens in the markets or there's some big news out, how does it affect credit?
Yeah.
How does it affect equities? How does it affect forex? How does it affect fixed income? How does it affect commodities? That's the way I was taught to think. And my ability to think in that way is what has grown over the years. It helps my brother's a credit trader, so all the credit stuff I literally can just bounce ideas off him, as well as people that I know on the market. But it helps my investment style because sometimes you get signals or you get news that happens in one asset class. It might be something like commodities. Something might happen in gold or silver or cotton or orange juice or something in the commodities world, purely a commodities play. But because I've got cross asset experience, I'm asking myself, you can get double leverage if you can find the right stock to reflect that view, and also a stock that even without the commodities angle is a stock that you would buy. You've got double exposure. If that stock then happens to be at a record low or really low price as well as a growth stock, then it's like your conviction level is going to be really, really high. Now, does that necessarily mean you make a lot of returns? Not necessarily. You can have a very, very high conviction investment that doesn't necessarily get you 80%. But that investment won't lose you money. It will get you that 10 to 20%. And you might have a medium conviction investment that you don't even put that much on, but you're in the money because something happens, you're right, and the volatility on you being right is quite punchy. So yeah, having a cross asset mindset is something I encourage everyone to have, whether you specialize in, like, it's not too difficult to learn, especially now you've got a network of people. So now the stock pickers group, you don't need to be friends with people to leverage their ideas. You ask a question, someone's going to answer.
And that's what I really liked about
And
that group
that's
as well.
that is one of the key things that I learned over the years. Like, I don't need to be someone's friend to ask for their opinion. As long as we're in the same desk, we're on the same desk, we're in the same bank, we're in the same industry, people are quite open with answering questions if you ask them. And if you ask them in a nice way, or if you also show that you're not just wasting their time or asking a question that you could easily get the answer to.
Because in that group as well, I've thrown, you can see I'm quite active, as you can see. I throw a lot of ideas there, and I like the fact that it gets challenged a lot, and I like that because sometimes I throw it there knowing that someone's going to give me the opposing. I don't know whether they're being contrarians or they're giving, but it's good to hear the opposing view to what you think. Then you can have a more balanced view of whether this stock is bullish or bearish. Because maybe sometimes you have confirmation bias. It's your baby. You've been watching it for months. You're trying to wait. You've been reading all the earnings reports. So then you want to pull the trigger. And because sometimes you might get emotionally invested to a story. And then when someone else can come in with a fresh pair of eyes, they can be a bit more...
it helps you see things from a different picture.
Yes, definitely.
And that's what I like about the group. I mean, I know stocks that I'm married to. I know stocks like Snapchat, and you know what? Before Snapchat, it was Tullow Oil. This is a funny thing. Like, I've made so much money from Tullow. I've made so much money from Tullow Oil over the past 6-7 years. Going in, getting my 40%, coming out again. Going in, getting my 40%, coming out again. And I've done it in fairly decent size. Now, without the group, I think I'd have still been in. And I would have been burnt. But the fact that people were talking about oil, and I had this philosophy of, if you got profit, take it off.
I'm with you.
Don't just put money in a stock and say, oh yeah, it's a 5-year investment. I'm going to hold it for 5 years because I want to prove to the world that I'm a long-term investor and I'm not a swing trader. Because it's so easy to get lost in that. Oh, if I come out of a position and everyone knows, then technically I'm a trader. Whereas for me, I try and use long-term ideas to enter a position. And I say, you know what? If after 5 years I'm 30% up or 10% up, I've outperformed my bank account. I've outperformed, if I'd even put it on an ISA. So if I'm willing to wait 5 years for 10% or for 20%, and the market is giving me 70% in 3 weeks, thank your maker, thank the market, take your money off the table and keep it moving. That's my philosophy. If, however, like now, what I can see with my portfolio, the way like coronavirus has intruded.
Let's call it the Rona-virus. I don't want to get demonetized. the Rona. No, seriously, videos get demonetized.
What that's actually done it's allowed me to pattern my portfolio such that I probably will be in a position to wait that 5 years. Which takes a lot of stress off me, because the market was giving so many opportunities where I was getting in and out, and I'm like, I didn't come in to get in and out. Why am I getting in and out? But the opportunities were there. Like, I was investing in stocks and looking at 40% within a couple of months, and even though I want to hold that position for a year, it's like, you take it off. And it's funny because there was a time where I was up 40% and I chose to wait it out a bit, and that 40% has come way back. And now the position's a little bit offside. And lessons like that reinforce those times. Even Snapchat, I was beating myself up for coming out at 12 too early. But in the long term, we're back at 12. Right? So if you did decide to hold further than the 12 level, and then you got like another 50% out of it, take it off. That's the lesson for everyone. Because this market is very good at humbling you just when you have the strongest conviction and when you think things are going well.
But I've got a question for you. Do you think, do you have a take profit in mind when you enter a long term investment position? The reason why I asked that is
Yeah,
because one thing I found is that there's a lot of, especially in my experience, there's a lot of institutional, especially investors that I know. Um, there's almost like trading is almost like a swear word to them. So they have like a such a they're so married to the idea of holding long, as you said, that even against their own better judgment, that okay, I held it for 6 months and it went up 70%, I should take. They think no, I need to hold my position. And sometimes if you have a take profit zone in mind, then you can exit at that point, whether regardless of if it gets there in 6 months or 6 years. But I find that
exactly.
some investors maybe don't. They have a period of time that they want to hold, but they don't have a number in which they think they can exit. And is that something that is there something that they can almost take from traders who almost have to be pinpoint in their entries and exits because of the nature of
Yeah.
the way they trade?
So my next move in the industry basically is to try and get back into a fund or a pension fund or
Yeah,
an asset manager, one of the long-term guys, and
yeah,
say, look, I know you guys have been doing this for years and years and years, but
yeah,
I've got experience in quantitative hedge fund
yeah,
where you learn about how you can use short-term signals to an execution
yeah,
to get in and out of
mm,
positions. And a lot of what you'd see me constantly preaching on the stock pickers
mm,
is the same thing.
mm,
Uh, if you look at a watch list, so we set up a watch list,
yeah,
right? There's a target entry and a target exit
yeah,
price for everything on the watch list. Now, not everything's filled in,
yeah,
and the reason it's not filled in is because I haven't found. I don't. I don't have a view on what I would say is a good entry or a good exit.
yeah,
The ones that are filled in are levels that I actually feel if it gets there, I'm going to start looking at this thing.
yeah,
I might not get in straight away at that level, but if I notice then a week later, after not getting in, price is then another 20, 30% down,
yeah,
for me, that target entry level can actually be my target exit
yeah,
and get me that 40%.
yeah,
So, yes, when I enter a position, I always have an exit price
yeah,
in mind. When I get to that exit price, I do some analysis to say, what's momentum saying?
mm,
Can it go? Can it go further? What has got price here? Is that a theme that's still ongoing?
yeah,
Um, but I'd say 70% of the time, once it hits that price, I will take either all my position off
yeah.
or some of it off.
Okay.
And sometimes I've been wrong in that I've missed out in more profits,
Yeah,
but that is something I'm always happy to do
yeah, yeah. I'm with
because the
you.
time where it comes back, it
Yeah,
hurts you more
yeah,
than you to say, you know what, I've made my profit,
yeah,
I'm out of it.
yeah,
There's so many opportunities in stocks that you can miss 10 opportunities and still get another 10 in the same 3 month period.
yeah.
It might not be the same, but it's there. So I spend my time missing opportunities.
Yeah, but that's it. Yeah, yeah.
And a
You
lot of time
always.
missing
Yeah,
opportunities.
yeah. That's the name of the game. FOMO is something that is part and parcel. Well, you shouldn't have FOMO. You should think, okay, there's always going to be another one, rather than getting something late. I like to get something at the
Yeah,
right time rather than late. What did I know you mentioned Taller already, but what about? Can you name me one stock? You don't have to name the stock if you can if you want, but can you name me one
I
stock where
can,
you,
I can, I can
yeah.
name.
Can you name me one stock where you thought, okay, yeah, I did that beautifully. That's one of my best trades, and one or investments, and one where it was like the biggest faux pas, the worst mistake ever. Like one of the best, one of the worst.
Um, I think Tolo definitely has to be up there with.
Yeah, yeah, okay, yeah,
I mean,
yeah, Tyler.
it was a trade I did a couple of years ago. So
Yeah,
my first trade in Tolo was a bad trade.
yeah, yeah,
And one of the things I learned when trading interest rates
yeah,
contracts 7 years ago
yeah,
is how to trade bad positions.
mm,
So my execution strategy usually always involves buying small,
mm,
double buying,
mm,
and then having you get 4 bullets,
yeah,
and your fourth bullet is your biggest bullet.
okay,
Once you hit your fourth bullet, that should be your position size,
yeah,
that your maximum position
yeah,
size you're comfortable for any one stock.
mm,
and then it's a hold all thing where
Yeah.
you just wait 5 years, 10, you wait, yeah.
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 But hopefully by the time you get there, your average price will be an average price where if you looked at that price 6 months earlier, you'd be like, whoa, I'll be very fortunate to get that price even on a small clip.
Yeah. Yeah. Yeah.
Right. So that gives you the confidence to just hold it for the
Yeah,
long
yeah.
term, saying on a worst case basis, even if from here we drop 50%,
Yeah.
it will at least come back.
Yeah.
Like that is a level we will see again.
Yeah. Yeah. Yeah.
My weighted average price is a level
Yeah.
we will
Yeah. I'm
see
with you.
again.
Yeah.
The next level after that is actually if you do see that level again,
Mm.
do you take your break even and say,
Yeah.
you know
Yeah.
what,
Yeah.
I'm
Yeah.
done? Or do you try and ride it for a bit of profit? That's another level. That's
That's
a
when the
conversation
psychological
for another.
stuff comes in, isn't it? Because you guys, especially on the
Yeah.
institutional side, you don't really use stop losses like that. You have to just you do it mental. You have mental stop losses and you exit the trade manually, right? All right.
Yeah.
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 So yeah, that's another story, isn't it? But I'm sure you got the risk team and
Yeah,
the compliance
especially
team
like
ready.
portfolio manager level.
Yeah. Yeah.
And it's interesting because I put some portfolio managers in.
Yeah.
Some of them are a bit quiet because they're just busy, or they might
Yeah.
be
Yeah.
like
Yeah.
fixed income portfolio managers.
Yeah.
But
Yeah.
there are a couple more that are going to come in, which is why I'm trying to like wait for people to leave so
Yeah.
I've got like at least 20 strategic people still that I want to add.
Yeah. Yeah. Yeah.
Because news has gone round now about the stock
Yeah. I
pickers,
know.
and
Yeah. Yeah.
people who left the group are
They
coming
want to
back,
come
or
back in
people
now.
who, yeah, yeah,
Yeah.
yeah. But um, that's an interesting problem for me
Yeah.
to deal with
Yeah.
because I do want that expertise in the chat.
Yeah.
Um, but I just have to manage it. Like when
Yeah.
people leave, just to say, okay, who in my network do I need in this chat now to
Value. Yeah.
to to add another dimension
So
of
you gave me one
thinking.
good. Tyler, who was with the bad one?
Um, Nectan.
Nectan. Okay, I've
Nectan
never
is
heard.
the worst
I've heard.
investment I've ever made.
Who are they? Can you give me? Who? I've never heard of them.
They're a gaming providing
Oh, okay.
company. Yeah.
Yeah.
So I got into this one because I just like the price,
Mm-mm.
and I'd seen the price at 10, 11 comfortably for quite a while, and I was looking at the price at like 3 or 4.
Yeah.
So my average price is something like about 4.1,
Yeah.
and now it's like 0.8, and I'm thinking, what is going on?
So what's that? What's the story behind that? Is it? What's the story behind that?
The price has just trickled down and trickled down. It's like
Is it fundamentals? Is there
every
something
time I
to
look at
do with
it,
the company? What? Because to go down. Oh, is there any
I think
backstory to that? Or?
market volatility, yes.
No.
I
Okay.
think they were struggling to raise funding, but
Okay.
then they raised a decent round of funding,
Okay.
and then my position actually went
Yeah.
20%, 25%
Yeah.
up.
Yeah.
And I was thinking, okay,
Yeah.
we're not going to see that bottom again,
Yeah.
right? But it's just literally 0.3 every day
Oh.
for like 2 months,
Yeah.
just chipping away. And now it's like 0.8, and I'm
So
thinking, I can't even average here.
are you still in or you just cut your losses?
I'm still
Oh
in
boy.
because I didn't hit my for this particular trade.
Yeah.
I didn't want to ever hit my position size.
Okay. Yeah.
It was just a case of I like this price. I
Yeah.
put 2K in it. I
Yeah.
put 2K in it, and either I'm going to lose that
Yeah.
2K or I'm going to be right.
Okay. Okay.
My maximum position size tends to be 5K,
So when you say
but I
you like
knew
this
that because it's a
price,
small
yeah,
cap.
yeah,
So
okay. When you say you like this price, can you expand on it? Was it? Did you do technical analysis? Was it fundamental? What else? Like, what did you mean by it?
you
Like,
know what? This was actually one where I'd never heard of the company before.
one of
Someone
those
mentioned
ones.
it on the
Yeah, them
chat.
ones. Yeah,
And I took a bit of a punt.
punt in the
It
dark. Yeah,
wasn't
yeah,
a
yeah,
high conviction
yeah,
trade. My high conviction trades
yeah,
I've managed very,
yeah,
very differently.
yeah, yeah, yeah,
And I'm right
yeah, yeah,
until the market hasn't humbled me yet
yeah, yeah, yeah,
on
yeah,
my
yeah,
high
yeah,
conviction.
yeah,
Um,
yeah,
I'm right, and I execute it
yeah,
very well.
yeah.
For these type of trades,
It's
I
just
just looked at how much profit I'd made last
yeah,
year,
okay, yeah, yeah.
and I just thought, you know what, I can afford to put 2K in this stock
You had,
because
you had the Midas touch,
market
and
was
then you
very
thought,
no, market was very, very kind to me
yeah,
last
yeah,
year.
yeah,
Like,
yeah,
yeah, my portfolio was up like 70%
yeah,
at a point, and then towards the end of the year, it dipped back down to like the 55, 60 level.
Mm-mm.
But nominally, it was
Yeah.
good. And the 2K at the time was fine
Yeah.
to put that play in place.
Mm.
And that's the thing about investing. You can do that sometimes.
Yeah.
Because when I put that trade on,
Yeah.
I said to myself, if this company goes bankrupt, I'm calm.
Yeah. It's nothing to
I'm okay. Yeah.
in the grand scheme of your account. Yeah, I guess so. Yeah, it makes
Yeah.
sense. Yeah. All right,
Yeah.
that kind of makes sense then in its entirety. If I put a 1% on a kind of like a punt trade because someone actually no, I wouldn't do that with technicals. I like to I go so granular with my technicals, but yeah, early stages I used to do that a bit more. But yeah, I'd probably if I could put 1%, I wouldn't do steep over it or something or 2%. Yeah.
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 And the thing is, even the price now at 0.8 or whatever
Yeah.
it is, I can't even tell someone to buy that price.
Yeah.
But I'll tell someone to put £200 at it,
Yeah.
because if that gets back to 4,
Mm. Yeah, it's
you
tricky.
make 4 times your money.
Yeah.
And if you lose your £200, I mean,
Nice. Yeah.
most portfolios are down more than that just from coronavirus. So
Yeah.
yeah, I might, like if someone wasn't in it at all, and someone said to me, "Find me a punt if it works out. Like if this thing gets back to 10, that's a 10 bagger.
Yeah, trust me.
That's a 10 bagger." And it was
Yeah.
at 10 last year. And it's not even the coronavirus that's suppressed the price. That's just added to it.
Yeah.
Actually, the company itself.
Yeah,
Um,
that's true. But also I just think as a trader in a group full of investors, I always find it interesting because I don't have directional bias, so I can almost make benefit from either direction, and I can see that the mindset changes as we hit a recession. So a lot of people are averaging down, as well as maybe I don't know, putting money in gold or the VIX index and stuff like that. What other ways do you think people can invest smartly outside of averaging down when you could see the markets in a decline?
okay, so for me, I'm a big fan of averaging down
Yeah.
and doing it you have to do it right. You
Yeah.
got to get your distances right.
Mm.
And that's very tough to do, especially if you're new.
Mm.
I don't know. I think I combine a bit of probability, a bit of maths, a bit of technicals.
Yeah.
I combine a lot of things before I get my distance. So for me, usually as a 50% offside is where you start averaging. Some people just look at a price and think, oh, yeah, that's cheaper.
Mm.
I'm going to add more on. For me, I look at the distances. I try and look at it like it's physics rather than it's economics.
Okay.
I say if something drops 50%, should bounce back at least half. So I'll double buy if it goes 50% down. And usually that has worked. I mean, 90% of the time that has worked to get me to a position that I like before the prices then jump back up to at least break even or more. I put a couple things on the website in terms of how I do my size and my execution strategy and stuff, if anyone wants to go and look at that. But in this environment, now we're in a bear market, technically, you should be selling rallies.
Yeah.
In this environment,
they say selling to strength.
Be very careful.
Was it selling to strength? Is that what? Is that what I'm hearing?
Yeah. In a bull market, you buy dips. In a bear market, you take profit on bounces, or you go short on strong rallies until we're no longer in a bear market. So in a bear market, you actually do want to avoid averaging.
Yeah, because you'll be averaging for a long time.
The only time you want to consider averaging is if you have a very, very strong view and the data backs it up that things are actually turning around.
Yeah.
But if you are going to average, you don't want to be averaging with 4 bullets.
Yeah.
And then get into like maximum position size.
And then you have to wait 3 years or something like that. And you're sitting in the red.
Just sit in the red.
Yeah.
And then 6 months time, you can say, okay, you know what? I'm ready to start looking to average.
Yeah, yeah, yeah.
Because by then, prices would have settled in
Yeah.
terms of volatility for you to make a more informed decision on which stock to average.
Okay.
And you might have missed the bottom, but you might be sure that that's the bottom.
Yeah.
So you
It's better
might
to
buy
be a bit
something.
late, I guess. It's better to be a bit late and catch the bottom when it's
Yeah,
coming up, as the green shoots, as they call it on the green shoots.
yeah. There's nothing wrong with averaging after the
Yeah,
bounce
yeah, yeah,
rather than trying to pick the bottom.
yeah, yeah,
But then you might say to yourself, if we have bounce, do I need to average? Or can I just wait it out and try and just get a break even rather
yeah,
than try and face this one to get a profit? Because there
yeah,
could be something else cheap
yeah,
that you actually make that money that you're making by averaging back
yeah.
by actually buying another stock that appreciates by even more.
It's true. It's true.
Um, so averaging isn't the be it and end all.
Yeah,
Especially in this environment, I'll tell people to be careful
yeah,
because the probability of you getting that average right is very low
yeah.
right now.
It's
So
true.
your probability of being right and saying, yes, I got that bottom is very low right now.
Yeah, yeah,
A couple of months ago, your probability of getting that bottom was high because we were not in a macro driven environment. Now we're in a
uncharted
black swan
territories. Yeah,
environment.
yeah, yeah.
Yeah. And
They're gonna be writing
you know
papers
what?
about.
The funny thing is, this is actually an environment where with good skill, you should be able to pick stocks out with one bullet. One bullet, maximum 2 bullets. If you're feeling you need 3, 4 bullets, that's
yeah.
Enter with 500, average with another 500, and then ride it out.
Yeah. Okay.
But make sure that second entry point is low enough so your average price is something you are happy with.
Okay.
Right? And then you say, okay, I've got £1,000 worth at this price, and I'm comfortable with that for the next 5 years. Worst case scenario.
Yeah.
Hopefully, I can make it quicker, but I'm comfortable with that. And yeah, that's how it. One thing I always ask myself, my highest conviction positions, I say to myself, is there something I haven't considered? Am I still right?
Yeah.
I'm always asking myself, am I still right? Am I still right?
It's critical analysis.
Snapchat,
Looking at the other side. Yeah, 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 definitely.
Yeah, Snapchat, I'm asking myself, am I still right?
Yeah.
Is 24 still on the cards? Am I still right, or do I need to adjust my view?
It's good to always continuously critically analyze the trades that you're in, just to make sure that you're not, as I said, the confirmation bias, because you've been watching it for so long. It's always so important to critically analyze these stocks.
Yeah, what have I missed?
Yeah,
is there something I've missed?
Definitely. And even crowdsource, ask
but
other
then
people.
How does this thing bounce when the market looks like it's coming back?
Yeah.
So I look at Snapchat, went from 8 and boom, back to 12, 50% bounce.
Yeah.
That for me tells me that, okay, it was just a victim of beta.
Yeah, yeah.
Right? It was just a victim of the macro world.
Yeah.
But I believe 100% this is a macro world, and the stock pickers are living in it.
Trust me. And thanks, Debodun. You've really given us given me especially a lot of nuggets. I really appreciate you accepting me into that stock group. By the way, I've learned so much. Can you tell people where they can find you on socials and even your website and stuff like that?
Yeah. Okay. So I mean, my personal is Man Like Debs.
Yeah.
That's where you see me literally being silly and just doing whatever I'm going to do in my personal life.
Yeah.
But where you can get the most value in terms of investing is Stock Pickers Association.
Yeah.
On Instagram.
Okay. Yeah.
If you want to sign up to the mailing list, which I actually haven't started blogging on properly yet, it's tinyl.com/stock pickers.
I'll put all of that in the description section below for the video anyway. So yeah, all your socials and to sign up for that mailing list, I'll put in the description section below. But yeah, once again, thanks for joining me on the podcast, and
thanks for having me.
Yeah, no problem.
Always fun talking about stocks.
Of course, man. Of course. All right. Cheers. Bye.
Right. Take care. Have a good one.
Yeah, you too.